G'day there everybody, thanks a lot for joining me as at this Tuesday afternoon market recap. It has been that of a relatively eventful day, I should say. We have seen the first major pullback since, of course, reversing off from this 24,000 handle on the Dow Jones Industrial Average. However, this is largely expected. We did see about 1.5 weeks of consecutive gains to the upside. We flirted around, or at least we took out this April high. This is on the Dow Jones Industrial Average, and yesterday I left you with a video which was titled "The Dow and S&P should follow or at least play catch up to the Nasdaq. However, should we be anticipating that of a pullback?" And essentially today, that is exactly what we have got. The Dow Jones Industrial Average down 240 points, the S&P 500 down 26 points, and interestingly enough, with about 15 minutes to go in today's session, the Nasdaq pushed on up very, very close to ultimately filling its gap. This is taking us all the way back to March, just shy of 7,467. Now, obviously, if I zoom out and show you this picture, this is the all-time high on the Nasdaq here in the month of March. So you can see that we are back up at relevant, or at least respective, resistance areas. However, when I bring up the chart of the Dow Jones Industrial Average, you can see for yourself, comparatively speaking, the gap is all the way back on up here at 26,435. And really what I was hinting at was that if we were to see that of a market pullback, you should be paying attention to, again, similar reversal candlesticks that may begin to set up like we saw at the beginning of May. Now, again, this is relatively early. I mean, today is the first downward sort of bearish session that we have seen in a number of weeks, again, since we turned at 24,000. So I'm not sure how much deeper this is going to go in terms of a correction. We do have that of a gap between yesterday's session and today. However, what you should be thinking about is, well, where are these exponential moving averages? Because essentially, if we are in that of the beginning of a move to the upside, and again, we're really using the Nasdaq as the centerpiece for this theory, let alone the actual structure of this chart pattern, which appears to be setting up, you should see, of course, dip buys begin to show on up around these 50, 10, and also 20 exponential moving average. It doesn't have to be spot on. Yes, essentially we still are moving sideways. However, we're under the assumption that we are in with, or that we are within sort of the intermediate change of the trend, so to speak, which is going to push us on back on up in conjunction with the macro trend, which is still overwhelmingly bullish, to take us on up ultimately to 26,435. So again, you're going to have to persist through this little pullback. If you begin to see reversal candlesticks anywhere around this 24,480 handle down here, that is a very good opportunity to add to the positions that you may have entered down in here at the turning point, but also some of these past sort of bullish breakout triggers as well. The market itself is still structurally sound. We aren't doing any technical damage. This is largely expected, and it is somewhat welcomed as well. It's never really good, I must admit, to see a downward session. However, all things being equal, we have seen this market really take off to the upside, and a lot of this selling is a lot of people taking profits around this little resistance point over here that we did overcome yesterday, but we are pushing back down below today. Now, again, with the S&P 500, you can see down 26.8 points, so to speak, with about 15 minutes left in today's session. We are still overwhelmingly bullish. Yes, I can make the sort of argument that we are producing that of evening star reversals. However, what we don't have, and this is a 3-day reversal pattern, is it's showing up really at the right location. This is just showing up in sort of no man's land at the moment. And again, I wouldn't be too concerned about the downward session that we find ourselves in today. We're still above the exponential moving averages. We're also pushing off from both the 100 and the 200 simple moving averages. We're actually, or what we could actually be doing, is retesting that rising 100 as new support. But you can see for yourself that, yes, this is just rejigging. The RSI is sort of resetting from overbought conditions, but we're not getting any bearish crosses at the same time. If you're paying attention to the stochastics, you could be saying to yourself, well, we are relatively overbought. Is this a cross down? And I'd like to believe, or at least what the analysis is leading me to believe, is that that is not going to actually happen. We saw this turn up at the midpoint at the 50 line. That is a signal of strength. And generally what happens is, once we just recalibrate away from this overbought setting on the RSI, the stochastics can sort of linger up here really until we get up to some more formidable sort of areas of resistance. So I just wanted to sort of float that out there. Again, what's interesting to note is that the Nasdaq did push on up into this gap. It did fall short of this ultimate target up here at 7,467, but again, you can still see a little bit of strength flowing into tech. Now, what's interesting about this also is that what we've done right now is we've just sort of recapped the market indices. Yes, it has been a bearish day, but in the larger picture, this is completely expected, and it's very much so welcomed, as I've already said. What's interesting to note is that if you find yourself right now sort of getting swept up in the emotion of this downward day, I'd like you to really reconsider those sort of initial emotions, because really what happens is when you start looking at a lot of these individual trades, they're doing exactly as what we have expected. Essentially with Apple, for instance, it's coming back down to retest the pivot. This is generally what happens after a breakout. You get the back test of the resistance as new support. It doesn't always have to play out, but at the moment that looks exactly what Apple is doing. So pay attention if you start to see white candlesticks around this 184, 180 sort of 5 area, where we more or less are at the moment. That could be a very nice trend continuation trade. If you pay attention, of course, to the exponential moving averages as well, we're still a long way away from that 10 rising exponential moving average, let alone the rising 20 and also the 50. So you can see for yourself that this pattern, for instance, on Apple is still overwhelmingly bullish. Now, if I bring up, of course, the chart on Amazon as well, you can see for yourself, well, yeah, so is Amazon. I mean, we've just cracked the 10, but at the same time, we're starting to get a little bit of a reaction at that 20, and really, all things considered, we're still largely moving sideways after the very favorable and positive earnings announcement, right up and very close to its all-time highs as well. So we're not seeing, first of all, breaks of the swing lows. We're not seeing any terminal reversal types of patterns. Of course, that may change moving forward, but at the same time, we still have an open window down here just shy of 1,550. So again, we'll see what the market does if it continues to pull back. But just looking at Apple and Amazon, there is still a lot of support holding these individual stocks up. We've got Boeing Airlines down today about $3, not the biggest of movements, but we are starting to see a little bit of a resistance pivot here around 345 handle, but it is still positive and profitable above 336, but you have to be open-minded when it comes to market pullbacks. Now, again, moving into Baidu, we spoke about this comprehensively over the weekend, and also here on this YouTube channel, we're coming back up to retest this pivot, this new all-time high on Baidu. And again, what we were waiting for was an upper wick, and that's exactly what set up yesterday. You can see we've got that of a shooting star candlestick, a big upper wick. This is where we simply manage the trade, or at least work with sort of the perimeters of what has been set up at this pivot point. We know it's a turning point. We know we're either going to break out above it, or ultimately we are going to turn back down and possibly head all the way back down to 215. However, if you've been listening to me long enough, you know I like to trade in the direction of the trend, and the trend on the markets is still to the upside. The trend is your friend, and what you'd rather not be doing is trading against the trend. So you can see today on Baidu, although we did see the gap down, we did push on up during today's session. We are still down $2.30 as at this recording, but it is that of just an ordinary sort of long day type of, Morobozu candlestick, where we've got a pretty decent movement, even pushing off from these lows as well. So expect Baidu to sort of hang around this pivot around 275, 274. If we can hold up here along with Amazon and also Apple, it sets the stage again for a breakout and a continuation moving forward after we get through this little correction, which is happening with the US market indices. Now, again, moving into Caterpillar, I spoke about this over the weekend. It looks as though we could be potentially setting up a roll. The roll could take us back down to about 148. I spoke about, how you should potentially look to cull some of the positions up around this 155 handle. We saw Caterpillar today close down about $3. It's not the biggest of sell-offs, but at the same time, we're starting to see a little bit of an oscillation from this resistance area. I'm not calling this a reversal whatsoever. Again, potential buying opportunity if we do close this window here. And you can see how this is aligning quite nicely with Apple and also Amazon. Sort of a similar type of technical setup, or at least a picture. And again, overwhelmingly, the structure of this chart is still very positive. Support is holding. We've come on back up to resistance. And I sort of gave this away, or at least I spoke about it in pro, was that when you see these long day earnings Morobozus, generally will come back up and then we'll roll. Okay, we'll come back down somewhere into this Morobozu candlestick. But if we set up that next higher low moving forward, well, then that's going to be that next sort of step that we can bounce off to push us above what appears to be that of that resistance swing high at the moment, but also take us up above the high of this earnings candlestick as well. So again, we're just going through the process of this, and it's nothing to be concerned about at the moment. We've been really hitting this market on the head, so to speak, for a number of months now. And everything is still going to plan. We've got COP, which has sort of bucked the trend. Apple pulled back. Did COP do the same thing? No, it didn't. It's up 41 cents. It's still pushing to the upside. This, when it trends, it just continues to trend. So there's no guarantees that we are going to come on back down to 67. We could just see this continue to defy the odds, so to speak, and just continue to trend. So if you're in this, congratulations. It's still moving to the upside. Just to rejig sort of your stops, you can pretty much place them around 67.50 at the moment on COP and sleep pretty easy at night. We've got CVX, very similar to Baidu, okay, respecting its resistance pivot at 130.79. You can essentially make this 133.35 entry a legitimate sort of default line at the moment. The reason for that is because we're starting to set up a number of candlesticks at this resistance area. When we first hesitantly come on up here and push and begin to tag this pivot, we don't necessarily know exactly what is going to happen. But as the story unfolds through candlesticks and through candlestick analysis, we can understand where the resistance pivots are and where, of course, the demand is going to overcome supply if and when we start pushing above those upper wicks. And you can see for yourself that we've got one session here, another here, and then a little spinning top candlestick on Monday. Today we pulled down, we're down about $1, not the biggest of movements. And also on top of that, structurally speaking, yes, we are at the resistance point of potentially that of a sideways moving channel. The good news is that we're still holding up above these exponential moving averages if in fact we do sort of set the stage for a breakout. The ADX is quite high, the CCI holding above 100. This is looking really, really good. As long as we remain above 122 roughly, there is every chance that we are going to break above 131, 132, ultimately to our sort of entry point, which is going to be a pretty decent trade moving forward. Now today, Google sold off down $27. We're still overwhelmingly profitable on this. But at the same time, we could be respecting or at least backtesting this pivot here at about $1,075 per share. It's always good, by the way, when a stock just rallies and doesn't really turn back and it just hits the target. Google got very close yesterday. It didn't get to 1,131. So again, it's fallen into this sort of very slight correction that we're seeing with the market indices. But over time, again, that is a very nice target on Google. If you wanted to take some profits, go for it. But at the same time, there's no reason that sort of suggests to us that 1131 is not going to be hit over the coming weeks. All right. So I just wanted to update you on Google. Let's move into IBM. IBM, you can see, largely just getting stuck moving sideways. What you want to pay attention to are these Bollinger Bands. You see how the squeeze is setting up very nicely on IBM? This is a great signal because ultimately if this support area holds at 140, this is going to be sort of the matchstick, so to speak, of this trade setup, which is really going to be relatively explosive when the time is right. We're getting very close to it. The longer we move sideways, sort of the larger impending move which is going to come. You have to sort of remain neutral, so to speak, or at least, pardon me, sort of directional or biased non-directionally. But at the same time, generally these play out to the upside. Okay, with my looking at a bunch of these over time, if we hold the support on a number of occasions leading into, of course, the Bollinger Band squeeze, generally the bulls will sort of win out when it comes to the actual contest of direction. So I just wanted to point that out on IBM. We've got Netflix, again, very similar to Amazon. I keep saying this, but it is very, very important. You see how we're pulling back ever so slightly, down $3.50, but we're still not even able to push on down below that rising 10 exponential moving average. This is a sign of strength. It doesn't mean that we have to hold above the 10, but at the same time, you see volume. Volume is really trickling out of Netflix. This is looking like a bull flag. The bull flag is setting up at or very close to its all-time high up here, just above $330 per share. So if we start pushing, or at least get a long day white Morobozu candlestick, a breakout candle, and this should work in tandem with the market potentially bouncing off from these exponential moving averages, although I don't want to say, hey, this is technical support, because it's not in the context of this anyway when we apply it to the market indices. But if you begin to see these sort of overlap each other and begin to confirm each other, that's going to be the signal that the impending breakout on Netflix is close. It doesn't have to, but if we were to see that of a big long day Morobozu candlestick, that is going to be a fantastic signal that, look, Netflix is about to break out. If I bring up the CCI, have a look at this as well. You can see that we're very close to the 100 line. The ADX is reset. It's down at the 20 line. And again, structurally speaking, we're still above the 100, the exponentials, or the 100 and the 200, the exponentials. We've seen a little reset in the RSI. MACD's trying to turn down, but this is not a sell signal. So I'm really liking the setup in Netflix and Amazon as well. We're sort of still jumping through the hoops of the trade setup. But all things being considered, that is a pretty decent trade, which is, I think, going to break out relatively soon. We've got Tesla. No surprise here, down $10. I'm personally not in this trade. I'm not in any Tesla positions at the moment. The reason for that is because the markets are still bullish. Although we have had the pullback, the markets are still structurally A-OK. So with Tesla, we do have an open window, which is set up between yesterday and today. This should fill. It may even fill tomorrow. But ultimately, we're just going to be right smack back, sort of in between both the ranges of resistance up here and support down here. So you can see that's the midpoint line at about $290 per share on Tesla. Now, I also wanted to update you on GLD and SLV, because this is interesting. For a very long time, I've been talking about this green rectangular box and ultimately how I believe we're going to come all the way back down and retest this. And pretty much today, we've seen GLD, gold, do exactly that. We've got this trend line which has started towards the end of 2015, early 2016, and we have a number of touches off from, pardon me, the support line. So you can see that we're trading at 122.47, a big gap to the downside today. But this is exactly where I've been speaking about gold as being that potential buy, where sort of X marks the spot of that trend line mixed with sort of horizontal support. If I go out to the monthly chart, pay attention to this red line. Actually, you can't really see it. It's pretty clear, unclear when I have all of these lines on my screen, but there is a red line coming through about this 122.90 handle. And the reason for that is because it's been a tremendous pivot of support and also resistance, depending on the dynamic of price, whether or not we're above it and testing it from above or testing it from below as resistance. At the moment, although we are slightly below this by about 30, 40 cents at the moment, this is still acting as support, and it's in alignment with this rising trend line. So although this dark candlestick here, it looks ominous, this may be some form of that last final exhaustion sort of push to the downside that could reverse very, very quickly. And this has always been the best buy location. We've said, hey, at least we can insure ourselves and guarantee that we're in it at higher prices. But if we do see the continuation ultimately down to these areas, this is really where you should be paying very close attention to GLD. So don't lose sight of GLD at the moment. It is right where we've wanted it to be for a very long time. You have to understand that we've been in this sort of channel consolidation for a number of months, and we were even speaking about, hey, what if we began to see that of a false sort of whipsaw to the downside? What I mean by that is if we get sort of a gap like we've just seen, and then a very quick reversal, okay, off from the lows, and it looks as though, hey, we're breaking out of the channel, blah, 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 and then you get a very quick reversal back to the upside. So think about that as well. We're going to have to monitor this Wednesday, also Thursday, Friday, but GLD at the moment is something that is looking very, very interesting. All right, so that's going to round us out for today's market recap. As at Tuesday, if you have any questions, please email me, success@pivotpoint-trading.com. I'll be back with you later in the week for some more market updates. All the best, everyone. It's James signing off on behalf of Pivot Point Trading. Goodbye.